The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I'm here with two more stocks for your aggressive growth stock radar. And I know this is going to be very exciting, but we've got two that are big movers here. First one we've got is Immersion Corp, and it's IMMR is the ticker. It is a Zacks rank number one strong buy, and it has an A for its growth style score. Now, pretty much all of these aggressive growth stocks that we talk about here are going to have A's. Usually, I like to see a low value score because the divergence there between growth and value tells me that I'm already on the right track. But with a B here for value, I'm not really going to complain. So let's take a look at why this stock is a Zacks rank number one. I think we can see right here that for the current year, the estimates have really moved higher here from 55 cents to $2.03. That is a significant move here. But if you see for the current quarter, there's a little bit of confusion here. Estimates moving from 15 cents positive to a negative 10 cents. So that is a bad move. We don't like that. X that out. Same for next quarter. But I think the idea here is that the analysts aren't fully clear on what's happening here. And we can see that the most recent quarter, there was a gigantic beat, 68% positive earnings surprise when the company posted 234 when 139 was expected. Let's take a look at the chart here, and we can see that the stock has really skyrocketed here over the last few months, just straight up and away, as we've seen estimates do the same sort of thing. And when we have that and we see a continuation of that, we can expect the stock to trend higher. So kind of a noisy chart here. Obviously the downward trend over the last few years, but that has recently reversed itself and things are looking better. All right, let's move on to the next one. And this is what a lot of people are probably tuning in to take a look at here. But this is Turtle Beach Corporation. And Turtle Beach goes under the ticker symbol HEAR, here. Can you hear me? So now Turtle Beach is a Zacks rank number one. You got to love that. And a strong buy. It has an A for value, incredibly, and an A for growth. And this stock has really been nothing but a tidal wave, killing the shorts of late. And what they do is they make headphones, and the video game Fortnite has been a huge success and has been a driver of a lot of the sales for Turtle Beach. If we take a look at the estimates here, we can see some numbers are really moving higher. Just 60 days ago, this company was looking at a loss of 12 cents for the year, but that number has really moved higher. Now looking at 97 cents. The number for next year was a break even next year. It was a penny 30 days ago, moving from a penny up to $1.21. That is a gigantic move for this stock here. We can see recently that there were earnings. The estimate was flat here, but it's calling it nothing. I think that there really wasn't a Zacks consensus estimate for most of the quarter, and that's why we have that little bit of confusion here. All right, so brace yourselves for what you're about to see next. The chart, this stock really was much higher not too long ago, then bottomed out here, but really close to nothing. And all of a sudden, we've seen this stock move from, $3-4 straight up. Now we're testing the $20 region. If these estimates are to hold here, what's to say that this stock shouldn't trade at 20 times earnings, maybe even 30 times earnings if you can keep it up? Does that mean the stock could reach $30 a share? That's a possibility. But, at the end of the day, try to remember that this company is making headphones. At some point, this demand does get satiated, and this stock, should the demand get satiated when the stock is at the $30 range, this thing would come screaming back lower. So definitely a what seems to be a day trading vehicle right now, ticker HEAR, but it is something to keep on your radar screen. It is an aggressive play. And if you can be on top of things, and if you can watch your your computer pretty much all day and be in front of it, this is something that is attractive at current levels. That's it for this week. Be sure to join us next time when I give you two more stocks to put on your aggressive growth stock radar.